Most people think crypto traders make money by winning trades. That belief has destroyed more accounts than bad strategies ever did. Because the real reason how traders make money is never shown on the surface. It doesn't look impressive, it doesn't feel exciting, and it doesn't announce itself when it's happening. Behind every profitable account is something far more quiet, far more disciplined, and far more uncomfortable than people expect. By the end of this video, you won't just know how traders make money, you'll understand why most people never will. Picture this moment. You enter a trade, the numbers turn green, your balance rises just enough to trigger a thought. What if this keeps going? You don't close, you watch. One candle moves against you. You stay calm. You've seen this before. Another candle follows. Now the profit is smaller, but you tell yourself the move isn't finished. Minutes pass. Your plan fades. Your screen becomes the only thing that matters. And when the trade finally turns red, it doesn't feel like a loss yet. It feels temporary. So you wait. This is where most accounts begin to bleed, not because of the market, but because of hesitation dressed up as hope. Here's the first truth most traders learn too late. Profitable traders do not make money by being right more often. They make money by controlling what happens when they're wrong. Winning feels important, but survival is everything. One bad decision, left unmanaged, can erase weeks of discipline. That's why professionals care less about how often they win, and more about how much they lose. They don't trade to feel smart, they trade to stay consistent. Where money is really made. Number 1. Before a professional trader enters a position, something happens quietly. They decide the maximum damage they are willing to accept. That number never changes mid-trade. It doesn't bend with emotion. It doesn't negotiate. This single decision is what separates long-term traders from temporary ones. Because the market doesn't reward confidence, it rewards control. Most people focus on where to enter. Professionals focus on where to exit, especially when things go wrong. Pattern interrupt. But here's the part nobody warns you about. Losses aren't what empty accounts. Reactions do. Overtrading and reaction chains. After a loss, the urge appears. To recover, to fix, to prove something. So, another trade is placed, without patience. And then another. Each one feels smaller than the last, but together they do the most damage. Professional traders understand something simple. Not trading is also a decision. Waiting is not weakness, it's protection. Deep truth. Professional traders don't aim to be impressive. They aim to still be here tomorrow. They don't chase movement, they let movement come to them. They accept boredom. They accept missed opportunities. Because consistency is built in silence, not excitement. Why most moves trap emotion. The market moves fastest when emotion is highest. Urgency creates mistakes. Mistakes create opportunity for someone else. Those who wait observe reactions. Those who rush provide fuel. This is why patience becomes profitable. Think back. What trade taught you this lesson the hard way? If this sounds familiar, comment "learned." Someone else reading it might avoid repeating it. And the most dangerous moment in trading isn't a loss. It's what happens right after a win. Because the real way traders make money isn't what YouTube thumbnails show. It doesn't look exciting, it doesn't move fast, and it doesn't reward impatience. What actually builds profitable accounts happens quietly, often while nothing appears to be happening at all. Most people never notice it. They're too focused on candles, alerts, and entries. But behind the screens, behind the charts everyone watches, there's something far more decisive shaping the outcome. Or so it seems. By the time most traders realize what really matters, the damage is already done. Because the difference between those who last and those who disappear has nothing to do with secret indicators, private groups, or lucky timing. It has to do with decisions made before the trade and discipline tested after it. And that's the part rarely shown. By the end of this video, you'll understand why two traders can take the same setup, enter at the same price, watch the same market, and yet, only one of them walks away consistent. You'll see why the moments that feel harmless are often the ones that matter most. Why some losses barely leave a mark, while others quietly reshape an account forever. And why the market doesn't reward effort, intelligence, or confidence. It rewards something else entirely. This isn't about how to trade more. It's about understanding what actually pays traders over time, even when the screen looks calm, even when nothing dramatic is happening. Stay with this. Because once you see what's been hiding in plain sight, you won't be able to ignore it again. You enter the trade with a plan. You know where you'll exit. You know what you're risking. For a moment, everything works. The numbers turn green. Your balance increases just enough to feel relief. This is the moment most traders never forget, because it feels like proof. Proof that the analysis worked. Proof that patience paid off. Proof that this time is different. So you stay. You don't close. One candle moves against you. It's small. You tell yourself it's normal. You've seen this before. You stay calm. At least that's what you tell yourself. Another candle follows. The profit is still there, just not as much. You think about closing, but then a thought appears. What if it continues without me? So you hold. This is where discipline quietly steps aside and hope takes over. Minutes pass. You stop looking at the chart as a structure and start watching it as a countdown. Every movement feels personal. Every pause feels loaded. Then it happens. The trade turns red. Not by much. Just enough to feel uncomfortable. And suddenly the reason you stayed changes. You're no longer trying to gain more. You're trying to avoid admitting something. So you wait. You tell yourself it will come back. You remember other times it did. You scroll through past wins in your mind, searching for reassurance. But the screen doesn't respond to reassurance. It moves. And with every move, your options shrink. This is where overconfidence shows its cost. Not loudly, quietly. Because earlier, you felt certain. You felt ahead of the market. And now, closing the trade feels like undoing that belief. So you delay. One more candle, one more minute, one more chance. Then the loss grows. Your breathing changes. Your posture shifts. You're no longer following a plan. You're reacting. This is where panic doesn't arrive suddenly. It builds through hesitation. You start moving stops. You start adjusting targets. You do things you promised yourself you wouldn't. Because now it's no longer about strategy. It's about relief. And when you finally exit, it's not because your plan told you to. It's because the pressure became too much. You close the trade. Not at the worst point, but far from where you intended. And the moment it's over, the chart keeps moving. Sometimes it recovers. Sometimes it doesn't. But the damage is already done. Not to the account, to your confidence. Because now, a question lingers. Why didn't I just close when I was ahead? This cycle repeats more often than people admit. Green turning to red. Confidence turning to doubt. Decisions turning reactive. And the most painful part, it feels avoidable, but only after it's over. This is why so many traders feel experienced, yet stuck. They've seen the patterns, they've felt the emotions, but they haven't changed the response. And until that response changes, the outcome rarely does. This is the part most people recognize themselves in, and that recognition is uncomfortable, because it means the problem was never the setup. It was the moment discipline was tested. Here's the part most people miss. Crypto traders don't make money because they know something others don't. They make money because they behave differently when it matters most. That difference doesn't show up on the chart. It shows up in decisions. Specifically, in how risk is treated. Most traders focus on entries. They look for the perfect moment, the perfect pattern, the perfect confirmation. But professionals look somewhere else. They look at exposure. Before a trade is placed, a quiet question is answered. If this goes against me, what happens? That question decides everything. Because money in trading isn't made by chasing movement. It's made by controlling damage. Let's make this clear. The human brain wants certainty. It wants to feel in control. So when a trade is green, confidence rises. And when it turns red, the mind looks for reasons to delay. This isn't a flaw. It's human. But markets don't care about comfort. They respond to pressure. And pressure reveals behavior. Where most go wrong. Here's the mistake. Most traders decide how much they want to make before deciding how much they can afford to lose. That order matters. Because once a loss grows beyond what feels acceptable, logic steps aside. From that moment on, decisions are no longer planned. They're emotional. And emotional decisions rarely protect capital. Professional traders reverse this order. They accept the loss first. They make peace with it. And only then do they place the trade. This single shift changes everything. Imagine two traders. Both see the same setup. Both enter at the same price. One risks too much. One risks very little. When the trade moves against them, one feels pressure immediately. The other barely reacts. Same chart. Same market. Different outcome. Because the real battle wasn't on the screen. It was internal. Emotion doesn't arrive loudly. It slips in through small justifications. Just a little more time. It always pulls back. I don't want to exit too early. These thoughts feel reasonable. That's why they're dangerous. They sound logical, but they protect ego, not capital. Professional traders train themselves to notice these moments, not to fight emotion, but to recognize it early. When activity feels productive. Another misunderstanding. Being active feels responsible. Waiting feels uncomfortable. So traders trade more than necessary. They react to movement instead of structure. They confuse motion with opportunity. But every extra trade adds pressure. Pressure increases mistakes. And mistakes compound quietly. Less activity, more patience, cleaner decisions. This is how consistency is built. Markets move fastest when urgency appears. When traders rush in together, someone else is already positioned. The move looks convincing. Confidence spreads. But what follows often surprises those who chased it. Because markets reward preparation, not reaction. Those who wait watch how price behaves after the move. Those who rush provide fuel. So here's the core idea. Crypto traders don't make money by predicting the future. They make money by managing themselves. They control risk before emotion appears. They reduce exposure before pressure builds. They survive periods where nothing happens. And over time, that survival turns into consistency. This is the part rarely shown. Because it's quiet. It doesn't look impressive. But it's the reason some accounts last and others don't. But here's the part nobody talks about. The mistake that costs most traders the most isn't what you think. It's not the loss itself. The charts don't destroy accounts. The setups don't trap traders. The market doesn't punish intelligence. What destroys accounts, what truly separates winners from those who fade, is how traders respond after the first sign of discomfort. Because the first red candle isn't the danger. The panic that follows quietly spreads. The hesitation that seems harmless becomes irreversible. Most traders think they're reacting to the market. They're not. They're reacting to themselves. And that reaction is invisible to everyone else. Behind the screens, behind the charts everyone watches, there's a quiet war happening. A war between confidence and doubt, between discipline and desire, between patience and impatience. Or so it seems. Because while you're watching price moves, the real story unfolds in the choices you make or fail to make. And here's the twist. The accounts that survive, the traders who profit consistently, don't avoid losses. They embrace the lesson they bring. They respect the discomfort. They act before emotion dictates. And this is the moment where ordinary traders pause and professionals step forward. This is why the next trade often determines more than the first. Not because it's bigger, not because it's smarter, but because it tests what you learned and whether you control the reaction or let the reaction control you. Here's the truth that separates the few who last from the many who vanish quietly. Professional traders don't trade to be right. They don't aim to prove they know the market. They don't chase recognition, patterns, or fleeting trends. They trade to survive. Because survival is the foundation of every single winning account. Think about that for a moment. The market doesn't care about your ideas. It doesn't reward your confidence. It doesn't applaud your strategy. What it does reward is patience, discipline, and control over the choices that matter most. Every trade, every candle, every movement tests you, not the market. And here's the deeper lesson. The trades that feel harmless, the ones that seem obvious, are often the ones that teach the most. Because behind the scenes, behind the charts and screens, there is something far more decisive than strategy, or so it seems. It's a quiet test of temperament, a hidden pressure invisible to everyone else that decides who walks away consistent and who walks away broken. Professional traders understand this instinctively. They know the market doesn't forgive arrogance. They know that losses are temporary, that missed opportunities are inevitable, and that the only thing they can truly control is their response. They survive because they act before emotion dictates. They survive because they respect the discomfort. They survive because they know winning isn't a moment, it's a series of small, disciplined choices made over time. And here's the paradox. Most people think trading is about knowledge, skill, or luck. It isn't. It's about awareness. Awareness of your own reactions, awareness of your own limits, and the courage to follow rules when no one else is watching. This is why stories of traders doubling accounts overnight or losing everything in minutes miss the point entirely. The real story, the one that matters, is written quietly every single day in the choices no one sees. Now, take a moment and think back to your own trades. Not the ones that went perfectly, not the ones you celebrated, not the trades you shared or talked about. I mean the ones that left a quiet mark, the ones that made you pause, the ones that whispered a lesson, but you didn't fully understand it at the time. Which trade taught you this lesson the hard way? Think about the moment when your plan seemed clear, every line of your strategy visible, every risk calculated, and yet your actions didn't follow it. The trade where hesitation grew, subtle at first, almost unnoticeable, until suddenly it became decisive. Or the trade where overconfidence whispered in your mind, and you listened, and the outcome reminded you who was really in control, who was truly dictating the move, you, or the market, or the pressure you didn't even notice. Think of the trade where a small decision, a tiny pause, shifted everything. The trade that at the time seemed ordinary, but in hindsight was a turning point. Take a moment to picture it. The chart may have been green, your balance may have looked promising, and yet, In those quiet minutes, the real story was unfolding behind the numbers, behind the candles, behind the charts. The moment where emotion crept in, small, silent, and unrecognized, until it became the force that shaped the outcome. Think about how it felt. The uncertainty you tried to ignore, the tiny rationalizations you whispered to yourself. Just a little more time, it will recover. It always does. The subtle tug between what your plan said and what your fear or hope told you to do. The moment when the trade no longer tested the market, but it tested you. Now consider this. This video isn't just information. It's a mirror. It reflects the invisible forces, the quiet patterns, that repeat in every trader's journey. Comment learned if something here just explained what you felt, but never named. Comment learned if you've been in that quiet struggle, that moment when hesitation ruled or overconfidence led, and the market didn't forgive it, or at least reminded you of it. Your experience matters, because someone else reading your comment might avoid repeating the same mistake. Someone else might finally see what has been invisible to them. The quiet decisions, the subtle patterns, the habits that determine whether they survive or fade. And think further. Every trader has a moment like this, a moment when the charts are moving, the market seems predictable, but the real challenge isn't on the screen. It's internal. It's the reaction, the pause, the hesitation, the choice you almost didn't know, and now, consider this. The most dangerous moment in trading isn't losing money. It isn't the red candle that wipes out your position. It isn't the market turning against you when you feel certain. The most dangerous moment is what happens immediately after. It's the choice you make when the numbers are still fresh in your mind, when emotion lingers just below the surface, when hope and fear whisper quietly, and you think you're in control. This is when ordinary traders act. They chase, they rush, they try to fix, and every reaction becomes a lesson they didn't want to learn. But the traders who survive, the ones who profit over time, they understand something few ever see. They don't try to be right again immediately. They don't try to recover in the next trade. They step back. They observe. They act with strategy, not emotion. And this is where most accounts are quietly undone, not by the market itself, but by what happens after the first loss, or even after the first win. The moment you think the danger is over, the real test begins. Because the next trade, the next decision, the next choice can undo everything you've learned or cement it into lasting results. And here's the part you won't see in charts, or in tutorials, or in flashy YouTube thumbnails. Those who succeed quietly prepare for what comes after. They survive the moments when most traders fail to notice the pressure building. They profit in ways that are invisible, until someone shows the pattern clearly, or so it seems. And that's why the next video, the one we've prepared for you, is critical. It reveals the exact mistakes traders make immediately after a win or a loss. It shows the hidden decisions that quietly destroy accounts. It uncovers what most traders never recognize until it's too late. So before you close this video, before you step away from the screen, remember this. The danger isn't losing money. The danger is what happens in the moments you think you're safe. And if you want to see how this plays out in the next trade, how professionals handle it, and how you can avoid the silent mistakes that destroy accounts, watch the next video now, because what happens immediately after a trade will decide everything.